Lemonade recently answered a huge question during their latest quarterly results. We want to get into that and what we see in Lemonade in this video. I'm Bradford Ferguson, Matt Smith. We're here with Rebellionaire.com. And Matt, what happened in the third quarter for Lemonade?
Lemonade proved they can finally price insurance right. Yay! So I think Lemonade is, for those who aren't aware, it's a fintech. It's an insurance company that is leveraging AI. But if you have been following this company over the past 2 or 3 years, one thing you may have noticed is that their loss ratios, which is essentially how much cash are you paying out to your claimants relative to the amount of premium that you're collecting. So you want that to be low. Industry norm is maybe 75% or so. Lemonade's loss ratio had been going the opposite direction for a while. It had been kind of ticking up. In recent quarters, it was 96, 97%, somewhere in that neighborhood. And it's just impossible to have a profitable insurance company if that's where your loss ratios are. So they were saying all the right things about, hey, here our AI is learning, it's pricing better, we're getting better, and our loss ratios are high right now because of either one-off kind of catastrophic events, or because they're introducing new products and there's some kind of regulatory lag and inflation. They always seem to have an excuse of why their loss ratio was so high. They always
Yeah,
seemed reasonable to us, but at some point you got to put up or shut up, right? And
right.
so that, I think, the biggest knock on Lemonade. And what they showed in Q3 is they finally had a very meaningful improvement in their loss ratio overall. And that's a blend of all of their customers, new and old. So the ones that were
Mhm.
priced with the older kind of AI pricing, and the brand new ones. But the most important takeaway from the Q3 call, I think, was that the latest version of their AI pricing model that they introduced at their investor day last November of 2022, which had some projected loss ratios that their newest AI was indicating. The actual results of that cohort that now has had a full year of being customers, it was dead on accurate with what the AI model was saying that it would be. So
Wow.
an extreme validation of the model, and actually there were two different cohorts that they represented. The actual results for the second cohort was 1 percentage point better than their AI model predicted. So a huge validation, I think, of their overall kind of pricing and frankly their entire business model.
And to me, that answers the biggest question or biggest reservation that I had, and I think many people had. The shorts really didn't get the memo for whatever reason. After this report, the short interest is higher in Lemonade, somewhere around 33%. Pretty crazy. Lemonade is not yet profitable, could become profitable in a couple of years or so, and shorts are very skeptical. So, Matt, tell us what loss ratio means before we move on to like some of the tailwinds that Lemonade is has at their backs.
Yeah, so loss ratio is essentially how good are you at pricing your insurance, and there's also some kind of short term noise in there. So for Q3, for example, how much premium did you collect from your customers, and then how many claims did you pay out? So you essentially take the ratio of your payouts, your losses, to the ratio of your premiums, and that's your loss ratio. So you need to be around, like we said before, 75% or so in order to have enough cash and margin left over to pay your overhead and hopefully have some profit at the end of the day.
Okay. So, what are the three tailwinds that we see for Lemonade?
Yeah, I mean, there's a lot to like about this company, but I think summarizing it in short would be they're taking advantage of some real trends. So they're starting with, they've got a tremendous amount of success with customers that are very young, 20 somethings just starting out their career, and
Hmm.
they may have penters, renters insurance, and maybe pet insurance. Penters insurance may be a new product line. We'll see if they introduce that. Um, but if you think of people who are just starting off their career, they don't have a whole lot of assets that need to be insured, and so the amount of money that they're paying is really small, maybe a couple $100s a year, and that's actually reflected in what Lemonade's average premium per customer is. It's historically been in like the uh, 300 climbing up to $400 per year range, which is really low. The national average is more like $3,000. but that's a reflection of the fact that they are doing incredibly well with these, young 20 something renters that are going to get promotions. They're going to own a house eventually. They're going to own a car. And as they kind of go through that natural life progression that many of us have gone through, as you kind of enter new phases of life, you're naturally going to be spending a lot more on insurance just kind of as you age up. So that's
Hmm.
the first kind of trend that we see Lemonade taking advantage of is as your customers naturally kind of age up, your premium per customer is going to increase. And that's
Yeah.
been a very steady trend that we can see through Lemonade's entire history. The second trend, which essentially compounds the first trend, is that their customer count isn't stagnant. They're growing their customer count pretty rapidly. Um, they I forget exactly. I think they just passed 2 million customers. Might have to fact check that, but
Hmm.
they have been increasing at a pretty rapid rate, even though they have actually dialed back their marketing spend. And so there's a pretty rapid rate of customer count. So if you kind of extrapolate forward maybe 5 years or so, when your customer count just has naturally expanded to several million, and then the average that each of those customers is paying has also increased due to that kind of age up trend,
Hmm.
and also bundling. So you go from uh, buying just renters and pet to maybe you add car, and then maybe you also add on a life policy, and all of a sudden the premium per customer it has the potential to be a lot bigger. So you've got essentially a double exponential where premium per customer is increasing, customer count is increasing. And if you kind of go forward a couple of years and watch what those trends will do, it has a really significant multiplicative effect on the company's revenue, say 5 or 10 years out.
Before we get into the third tailwind, is it also right that the number of customers per employee is exceptionally high with Lemonade already, like even before they scale further?
Yeah, so we haven't touched on this too much, but they automate their processes to an extremely high degree. So, I have some of my insurance, my car insurance is actually through AAA, just as an example, because Tesla and Lemonade don't offer it in Michigan yet.
Uh,
But I have an actual AAA agent, and they've got an actual physical office that they go to. And so the amount of employees that a traditional agency that doesn't have AI agents essentially kind of managing these relationships and handling a lot of the customer inquiries and help, like I've had to call the 800 number for my auto insurance several times just for
yeah.
stupid payment information, things like that. um, that's that all takes employees to kind of manage those processes. Lemonade, by automating so much of it and having, frankly, a phenomenal customer experience. I do use Lemonade as my home insurance, um, and all these billing things are just handled automatically through the app. So I've never had to interact with an individual, and so the amount of kind of operating leverage that they have from the software that they've built in house is really phenomenal.
So we talked about how the top line we think is going to increase at a potential double exponential. How might the bottom line benefit uh, longer term?
Yeah, so I think the last piece to get to gross margin anyways would be the loss ratio improving. So we touched on that at the beginning of how the Q3 results from 2023, the most recent results that Lemonade posted, where we think a very strong validation that their technology, their core technology, is actually doing its job, that it is pricing risk appropriately, and it's frankly getting better all the time. So Lemonade, while they've essentially already reached pricing that seems to be um, right where they need it to be to succeed long term, they're not stopping
Mhm.
here. They're going to continue to add more data points to allow their AI to just continue to evolve and get better and better at pricing. It's going to be relentless at its pursuit of that. So over time, that trend should continue to improve, and Lemonade's loss ratio should come down. So if you think of the expanding revenue, expanding gross margin too, um, as the loss ratio comes under control, then you're going to be left with what's your operating expenses to kind of back out of that to get to your net profit. And as we already touched on, also, so much of Lemonade's processes and their overhead are handled by the AI. Their biggest expense right now is R&D, and essentially it's the AI technicians that are handling a lot of the core capabilities.
Hmm.
Your customer base and your revenue therefore grows by say 10x. You don't need 10x the software team to handle that increased volume. So the
Yeah.
software substrate that they've built to manage their entire business can grow with very minimal increases in operating expense going forward. So that's I don't think there's ever been this might be a little bit of hyperbole, but there's hardly any companies out there that have the potential, at least, for the operating leverage that Lemonade is capable of achieving.
Hmm.
Um, they're not going to have a brick and mortar stores. They could expand to an entire different country. They could expand and enter into an entire new product line, and they wouldn't have to significantly increase their overhead or their office count or their billings collections department or anything like that. So there's just a whole bunch of operational efficiencies that will, we think, create tremendous net margin improvement over time as they're going to be close to break even, we think, in about 2 years. But if the revenue 10x's from there in over however many years, their operating expenses shouldn't increase anywhere near that level. So in other words, all the incremental gross margin, a very high degree of that is going to drop to net margin at the bottom line, or at least pre-tax net margin. So um, that's we think very exciting and something that I think is underrated and a reason to like the stock in the long term.
That's what excites me is the potential to be the lowest cost insurer as far as not necessarily to the customer, but the way the business is run, to be able to produce a service at the lowest cost, I think is very compelling, and that leads to profitability. Um, so let's talk about some potential risks. The first obvious one is this quarter was great, and they got within 1% of predicting how their new cohort would do, versus what they thought it would do a year ago. So there's a potential that this could be an aberration, and that next quarter they run into some more issues, and that or the prediction isn't quite as close as it was, or off by quite a bit. I think that's one potential issue there. What do you think some risks are, Matt?
Yeah, that's one. I mean, the catastrophic risks. So, in other words, hurricanes or hail damage was one that really impacted their loss ratio in Q2. These are quite naturally things that you can't predict, and it's why the insurance market really exists to begin with, because you're going to have some kind of freak events that are hard to predict. So,
Hmm.
um, how good is their software going to be at predicting the unpredictable? I think there's no reason to believe that they shouldn't be in the long term capable of doing that as well, and I would argue even better than the incumbents who are kind
Hmm.
of using older models and methods. As a quick aside, Daniel Schreiber had an interview recently where he was talking about how to generate insights about all the different factors that can give you indications of a potential customer's risk profile. And
Hmm.
one of the things that was really impressive was, if you and I are having a conversation, Bradford, I might pick up on some soft, subtle things about your body behavior, your posture, like what's
Hmm.
your general disposition. And those are, kind of things that an actuary working, with a data set that a traditional insurer won't really have access to, because it's all kind of tables and data. And what Lemonade is able to do by detecting the way that your mouse moves on the screen, for example, or how long do you stay on this one particular question, there's all
Hmm.
sorts of interesting data points that they have access to. Now most of them might end up being worthless, but by having a funnel that is so much wider than the other kind of incumbents, there's potential that they're going to be able to generate some insights that are truly novel. But the
Well,
risk is that.
one silly example of this is they use a chatbot for a lot of what they do. And I think if someone's rude to the chatbot when they're signing up, that's a sign that they're not a good insurance risk.
Yep. Yeah, and there's
I think
uh
the chatbot even starts out by saying like, "Hi, how's your day today?" or something like that.
yeah,
And
it's
if the person
extremely
is
easy
like,
to.
"Let's get right to it," then then they're like,
And
maybe
they're going
not.
to have more and more of these data points over time as the customer base grows and just the time history expands. So it's really interesting the capability of where this could go. And as another just very quick aside, it's like a tangent on a tangent. They are just really good at iterating. So they've found some issues where they think there could potentially be fraud, but they don't really have like hard and
Mhm.
fast proof that a particular customer claim could be a fraudulent claim. And so they just tried sending an email out saying, hey, we're reviewing this claim for fraud. We just wanted to let you know. And they actually found 50% of the people they sent those emails to retracted their claims, which is just like wild. And that's something that I don't think you're going to see a lot of traditional insurers kind of having the insight or the ability to try things like that to pick up on these minute little indications that something is maybe just a little bit amiss with this one particular claim. And even if they could do that, like it's such a manual process for the legacy insurer. So anyway, this was a question about where the risks, and I talked about how awesome Lemonade is. So getting back to the risks, Lemonade is a small company. They have just under $1 billion in cash, and there is a strong regulatory need to have cash on hand to handle customer claims.
Mhm.
Those are kind of jurisdictional requirements by the different geography
States.
states that they're operating in. Um, so there is risk that their growth could be limited by the fact that they need so much capital to build up or to expand their customer base.
Mhm.
And associated with that is they're heavily reliant on reinsurance. So to the extent that their reinsurance partners don't want to re-up, then that could create some potential risk down the road. But what they've seen so far, last year was a horrible market for reinsurance, and Lemonade was actually oversubscribed. So what we're seeing is that the reinsurance partners are actually validating Lemonade's approach, which is probably worth a lot more than you and I, who are not insurance experts, Bradford, saying that we
Yeah.
like the company. The reinsurers like Lemonade. That should speak volumes.
And reinsurance is just an insurance company that buys the policies of other insurance companies and agrees to take on portions of that risk. Matt, before we end it, I do want to disclose that you are a Lemonade customer, and maybe you could share how Lemonade delighted you as a customer.
Yeah, so I am a Lemonade customer. I bought a homeowner's insurance policy about 16 months ago. They actually delighted me twice, and so I'll tell
Oh,
the two
okay.
very quick stories. One was when I first initiated the policy. I was honestly kind of dreading canceling my old one because like you got to call
Mm.
the agent, and it's like a pain, and it's like, oh, like how can we keep you? And it's just like I didn't want to deal with that. So at the end of the process, I signed up for Lemonade, and the AI bot, and it took like 5 minutes or less. It was just incredibly intuitive and
Mhm.
a phenomenal process. Which signing up for insurance is not supposed to be a fun or a nice thing, and it actually was, which is just like goes to how good their customer service is. Anyway, end of the process, the chatbot just says, "Hey, would you like me to draft a cancellation letter for your existing policy?" And I was like, "Yes, I would love that."
Yeah.
So we got um, it just asked me like for my policy information, and so like I looked that up quickly, got it, and then it just generated a PDF letter, which I could then just email to my agent, so I didn't have to deal with the process. So that was uh, delight number one, that they just essentially took care of that for me. And then number two was out of the blue when my renewal came up, they said that they lowered my rate. I forget how much by, but it was around $100, $150 a year, something like that. And
Mhm.
turns out what happened is they're using satellite imagery to assess the risk of all of their customers. And I got a new roof last
Wow.
year. And so they were able, just by looking at the satellite imagery, to say, oh, you've replaced your roof. That lowers our exposure, and we're going to pass those savings on to you. So completely unexpected on my behalf. They just proactively lowered rates. Like I've never had an insurance rate be lowered for health or auto or anything like that out of the
Mm.
blue. So that was a huge surprise to me, and generated a lot of goodwill. I mean, they could have, as an investor, maybe I would have even preferred that they they didn't pass it on. But I think in the long term, these finding little ways like this to delight your customers is something that Lemonade is phenomenal at, and makes me bullish for the company in the long run.
Awesome. So Matt and I, we are financial advisors. This is not financial advice. Rebellionaire.com is a brand of Halter Ferguson Financial. And you can find out more about us at rebellionaire.com. And I believe that's going to be it for now. I'll say bye for now.
For now.